SIP. So again, it doesn't really matter which SIP frequency you select. It ultimately, at the end of the day, the returns that you're able to generate, irrespective of whether you do a daily or a weekly or a monthly SIP, the returns on a longer period of time turns out to be similar. Just do a simple SIP every month or whenever you receive your salary, do it at that day, and just keep on continue to invest. I think that is the best mode to wealth.
Hello everyone, welcome to the 22nd video of our podcast series Talks with Daulat. I'm Rahul Verma, content and growth lead here at Daulat. Daulat is a tech-enabled owner-one wealth management platform that provides investors with customized portfolio solution to invest better and reach their financial goals. Today we have our founder and CEO, Mr. Varun Fatehpuria, who is a NISM certified financial advisor and has worked in renowned financial institution firm like Blackstone and Bloomberg post completing his degree in finance information system from Hong Kong University of Science and Technology. Hello Varun, hope you are doing well.
Thank you for having me on the show, Rahul.
So Varun, everybody is saying SIP कर लो सही है. So essentially I don't understand the deeper meaning of SIP and I need a guide for my SIP investment. So that's our today's topic, guide to planning your SIP. So my first question would be, what is SIP and how does it help in compounding and wealth creation?
So SIP simply stands for Systematic Investment Plan. A lot of people actually confuse SIP for an investment product or as an asset class, but SIP is simply a feature or a service that is provided by all the mutual fund companies in India, which allows you to invest a predetermined amount of money in a set frequency. So let's say if you're investing in any mutual fund and if you want to invest a certain set amount of money, let's say for example 10,000 rupees, you could do that via an SIP, depending on what your frequency is. Either you could do a daily SIP or a weekly SIP or a monthly SIP or a quarterly SIP, depending on how you want to approach it. But SIP is simply a process through which you invest in mutual funds a predetermined amount of money in a set frequency. That is the purpose of SIP. The biggest advantage of investing in mutual funds, investing in capital markets through the mutual funds via an SIP is because it helps you create a discipline of investing in the markets. A lot of the people actually get lost into trying to time the market, trying to time their purchases when they think the market has hit a bottom, or trying to stop, for that matter, even their purchases when the market is being really volatile. SIP effectively strips all of these things and it has a psychological impact on your mind. Just because you know that you'd be investing a certain amount of money in a set frequency, I think that cognitive load is essentially taken off your mind of trying to time the market. And effectively, over a longer period of time, we have seen, and this is something that we are going to talk throughout this podcast by showing you relevant data, that how by trying to just invest in a disciplined manner over a longer period of time can help you create wealth by just simply sticking and creating a habit of investing.
Thanks, Varun, for clearing the definition of SIP. Is there any specific date on which we should make our investment through in our SIP plans?
So again, I think Indians are very creative. They have started to get extremely creative with respect to when do they would like to uh, invest in mutual funds through the capital markets via an SIP. I think firstly, when you were just getting started, there was option of a monthly SIP simply because people received their salary on a monthly basis. I think then over a period of time, mutual fund companies also started to provide features to investors where they could do a daily SIP or a weekly SIP or a quarterly SIP, just by the way of providing options to all of these investors. And obviously, I think once people started getting those options, they started to get a lot more creative, thinking that if they would also be able to split these SIPs. So rather than doing one monthly SIP, right, let's say on 15th of the month or 20th of the month, if they could split that into multiple SIPs on a monthly basis, or if they could choose a specific date for an SIP if they were doing it monthly. Let's say, for example, I think a lot of people would like to do it on the last Thursday of the month simply because of expiry of FNO. where that leads to a higher volatility. People think that by again timing these SIPs on a monthly basis, but a very interesting research was done by one of the asset management companies, which shows hard numbers of how, actually, irrespective of which day of the month you actually do your SIP, it doesn't matter. Over a longer period of time, the returns are pretty much similar. So let's say if we were to take an example, if an individual were to do an SIP starting from first of every month and continue to do that for 10 years, right? And let's say if he or she were to do that same SIP on the 28th of the month, right? Or closer to the end of the month, right? The returns pretty much turn out to be similar. So as you could see in the screen, if someone does an SIP on first of every month, he would have achieved an SIP return of 15.7%, assuming he invested on the first of every month for the last 10 years. If you would have invested on the 10th of every month, the returns would have been 15.62%. If you would have invested on 28th of every month, the returns would have been 15.68%. So as the data shows, it doesn't really matter on which day of the month you are doing your SIP. The end goal here is to just be disciplined and get into the habit of investing.
What should be the frequency?
So again, as I talked about, Rahul, right? Instead of doing a monthly SIP, people started getting creative. They started doing daily SIPs. They started doing weekly SIPs. They started doing bi-monthly SIPs. Whatever permutation combination you would like to have, people started getting into that. Again, the report digged into this and did some research where they basically found out that, let's say, for example, if you did a daily SIP of 1,000 rupees, right, over the last 20-25 years, and assumingly you invested a total amount of 66 lakh rupees, that would have turned out to be approximately 6.74 crores at an XIRR of 14.5%. Let's say similarly, for example, if you had done a weekly SIP of 4,754 rupees from a period of 1996 to 2023, that's approximately 18 to 20 plus years, you would have again assumed to invested 66 lakh rupees and got a valuation of 6.7 crores. Similarly, if you did simply a monthly SIP, which is again ideal for a lot of the investors, that 20,000 rupees SIP would have turned out to again a similar amount of 6.77 crore rupees. So again, it doesn't really matter which SIP frequency you select. It ultimately, at the end of the day, the returns that you're able to generate, irrespective of whether you do a daily or a weekly or a monthly SIP, the returns on a longer period of time turns out to be similar.
Thank you, Varun, for clearing the date and frequency part of our SIP planning. Many people try to time the market. Is it a healthy practice while doing an SIP?
So again, the entire purpose, Rahul, of doing an SIP is to basically get that bias out of investors trying to time the market. I think that is one of the biggest pitfalls that a lot of the people get into when they're investing in the markets, that they get into the habit of trying to time the market. No one really knows what the bottom or the peak of the market is. And that is really the fact of the matter, whether that's happening domestically or globally. No matter what an expert comes on a TV and tells you, no one really knows if the market has hit its bottom, or is it going to continue to fall, or at what point in time the market is going to pull back and start to rise, right? So it doesn't really matter. I think if you get into the game of trying to time the market, ultimately the entire purpose of an SIP is to get that bias out of your mind as an investor, and just to get into that discipline where you're investing consistently over a longer period of time. It sounds really simple, but unfortunately people complicate it by getting into all of these things of trying to time the market. But that is the entire purpose of doing an SIP, of trying to not time the market.
Okay, as diversification is an essential part of portfolio management, what should be the asset allocation while doing an SIP?
So again, I think asset allocation really depends on who you are as an investor, what your time horizon for investing is, what is the goal that you are trying to achieve through this investing, what your risk appetite as an investor is. Again, if you were to present some numbers over here, whether if you are investing in large caps, which are the top 100 stocks of India by market capitalization, or mid cap, which is from 101 to 250, or even for that matter, small cap, which lists company anywhere below 250. Again, the data will basically tell you that over a longer period of time. So let's say in this example, we have seen data from 2005 to June of 2023. That's roughly 18 years of data, right? If you would have invested in an SIP on a large cap total return index, which is a Nifty 100, the average return that you would have been able to get is approximately 12.5%. Similarly, on a mid cap basis, that's 16.5%. Small cap, that's 13.6%. So obviously, small cap tends to be a lot more volatile, and large cap fund tends to be a lot more stable. But again, just by looking at the numbers, you would believe that it is best to do SIP in a mid cap index fund or a mid cap segment. But again, I think the asset allocation really also depends on who you are as an investor, what your risk appetite is. So I think it's as from an asset allocation perspective, that is a lot more nuanced. There's a lot more study that needs to go into deciding what the appropriate asset allocation would be for a particular investor. But at the end of the day, here the goal is to create a diversified portfolio across market segments, across, I would say, geographies, across different styles of investing, across different asset classes, whether that's equities, whether that's debt, whether that's commodities. I think that really helps in creating a diversified portfolio.
All right. What should be the ideal time horizon for the investment?
Again, so the ideal time horizon, let's say when you're investing through an SIP, people would obviously assume that it's a long-term investment. But again, long-term depends and differs from people to people. For someone who's saving up for a retirement, long-term could mean 25 years. But let's say if you're investing to purchase a home, right, that long-term could look probably 5 to 7 years for you. So again, long-term over here really depends from people to people. But let's say, I think as a good rule of thumb, whenever you're investing in the markets, specifically the equity markets, I think long-term here would mean anything 5 years and beyond, right? Anything below 5 years typically would be characterized either as a short term or a medium term. Because again, history suggests, if you go back to the history of stock markets over 100, 150 50 years, we have seen that an investor who stays invested consistently over a 5 year, 7 year, 10 year period typically tends to do well. Typically, they do not, or have experienced negative returns. I mean, average return of the stock market would be approximately 13 to 15%. So the ideal time horizon would really depend on the goal that you're trying to save towards, and again, what your risk appetite and time horizon for investing is. But as a good rule of thumb, I think if you're investing in equities, try to have a minimum time horizon of 5 years.
Thank you, Varun, for clearing all our doubts regarding SIP. That was an insightful session. Hoping to host you again soon.
Thank you for having me on the show, Rahul. I hope this was insightful. A lot of people have really wrong notions and, I would say, facts about SIP, and they add unnecessary, I would say, complexity to the investment. So hopefully through this episode, we are able to shine light on a few of them, as to how you should keep your investments simple. Just do a simple SIP every month, or whenever you receive your salary, do it at that day, and just keep on continue to invest. I think that is the best mode to wealth creation.